a center for facilitating buying and selling the financial claims asset. Okay, now is addable. Okay, please. Okay, service and security financial asset comprise a deposit, a debt, stock, bonds, a government security, checks, bill, etc. Participant in the financial market are brokers, agent, and commercial banks and non-bank financial institution. Banks, a mutual fund, discount house, acceptance house, a central bank. Okay, then go to the meaning of financial market. The market which individual and institution trade a financial security, organization, institution in the public and private sectors also security and the capital markets in order to raise funds. Thus, these types of market compose of both the primary and secondary. The comprise of two things: the primary and secondary market. According to the Brigham, of the place where the people organizing wanting to borrow money. ಇವಾಗ ಕೇಳಿಸ್ತದೆ, ಇವಾಗ ಕೇಳಿಸ್ತದೆ. ಕರೆಕ್ಟ್ ಆಗಿದೆಯಾ ಕ್ಲಾಸ್? ಓಕೆ, ಈಗ ಬನ್ನಿ. ಈಗ ಬರ್ತಾರೆ, ಸ್ವಲ್ಪ ಲೇಟ್ ಆಗಿದೆ. ಓಕೆ, ಆಯ್ತು. ಈಗ ಇದು 1 hour ನಿಲ್ಲಿಸ್ಬೇಕಾ ನಾನು, ಇಲ್ಲ ಕ್ಲಾಸ್ 11 ಗಂಟೆ? 11 ಗಂಟೆ ಆಯ್ತು, ಅದೇ ಕ್ಲೋಸ್ ಆಗುತ್ತೆ ಅನ್ಸುತ್ತೆ. ಹೌದಾ, ಸರಿ. ಓಕೆ. This a market where financial instruments such as financial claims, asset and securities are traded is known as financial. Once again, a financial market where a financial instruments such as financial claims, asset and securities are traded is known as financial market. Okay, a financial market transaction may take a place either specific place or location. The financial market of a financial market physical existence is called as either a specific place or location. Okay, next go to the classification of financial market. The two classification: the capital market and money market. A capital market, a bought and sold known as a security, is a very important. The capital market is a bought and sold known as securities. The securities are shares, bonds, debenture, etc. It plays a vital role in facilitating the free flow of funds. Very important. The free flow of fund from surplus and deficit unit provide liquidity, a marketability, safety, etc. to the investors and accelerate the rate of capital formation. A legal instrument that represent either one ownership or debt is known as financial security. Okay, a ownership security comprise equity and preferences, while a debt security include bonds and debenture. A security is used to raise a loans and promises to repay the borrower. This is called as the capital market. Then we move to the money market. A money market is a very important. The already learned the bank, instrument, mutual fund. This is all our common the money market. Okay, a money market displays a trading money and short-term financial asset. No confuse. A capital market is only for the long-term debt, or the long-term asset, or the long-term market. The money market is only for the short-term market. Don't confuse. Okay. A short-term finance asset mean asset which is get rolled over within a period 1 year. Okay. The choose a substitute for money means financial asset which we quickly convert is a very important. A quickly converted into money with minimum transaction cost. At the next go to the money market does not refer to particular place where short-term funds are dealt with. It includes all the individual institution and intermediaries dealing with short-term funds. The transaction between borrowers, lenders, and middlemen take a place through the telephone. It's a very important. Take a place at telephone, telegraph, mail, and agents. No personal contract or presence of the two parties is essential for negotiation for money market. Okay. However, a geographical name may be given money market according to its location. For example, a London money market operates from the Lambert Street and New York money market operates from Wall Street. Similarly, the Mumbai money market is a center for short-term loanable funds of not only in Mumbai but also the whole India. Okay, next one go to the unorganized money market. Organized means the capital market and money market. Now go to the unorganized financial market. In this, the Indian, we have unorganized financial system is not uh, amenable to control by Reserve Bank direct. In this system, there are a number of money lenders, traders, landlords who lend the money to public and endogenous banks who also accept a deposit from them. There are also private finance companies, chit funds, they're very important, chit funds, and host of other unincorporated bodies whose activities are not amendable amendable to the financial discipline of RBI, but the same activities like deposit taking activities, the RBI and the government control the maturity and interest rate at the deposit, etc. Okay, next go to the importance. A very important first importance, encourage domestic saving. The to say the people is low. Developing countries and a major part of saving is kept in form of ornaments of gold and silver asset, spending on unproductive activities and liquidity preference. The financial market encourages people to invest in their savings. A very important, people invest invest in the savings in security. This is called as encouraging domestic. Next, go to the mobilization of savings. A public savings are scattered. These savings mobilize and collect through the financial institution. This is institution, post office, for example, post office, banks, company deposit, LIC, UTC, sorry, UTI, Unit Trust of India. Next, go to the investment savings. Okay, financial market not only collect mobilize savings, but they have also invested to productive users. It's a very important. Also invested into productive users. The rate of economic growth is accelerated. The capital formation and the rate of investment is increased for the capital formation. When the competition among securities rise the prices, the rate of interest is reduced. Okay. Next, go to the helpful to non-financial sectors, is helpful to the government, economic development of country, increase in monetary liquidity. It's very important. A finance institution operates some policies in the financial market which maintain the monetary liquidity. For example, bank create credit and provide short-term, medium-term, and long-term loans by which the equilibrium is attained between the demand and supply of the money. It is very important. The demand for and supply of the money. The supply and working capital keeps the production cycle in process, the commercial and industrial sector. For example, purchase raw material, semi-production and production, sales in the market and conversion in the cash maintain demand and supply. Okay, next go to the functions of financial market. The first function, transfer of resources. Already told, the investors and borrowers can exchange their own money. Next, go to the enhance income, productive usages, capital formation, price determination, sale mechanisms, information. Okay, this is the main functions of financial market. Okay, next to financial function, the providing a borrowers with fund so as to enable them to carry out their investment plan, to providing the lenders with earning asset so as to enable them to earn a wealthy by deploying the asset in productive ventures, providing a liquidity. It's a very important, make underline, providing the liquidity. Liquidity means easily convertible cash. Cash is easily convertible to the another asset. Okay, in the market also facilitate the trading fund. Okay, then go to the primary market. The primary market is a part of capital market that deals with issuance of new security. Companies, government or public sector institution can obtain funds. Okay, the primary market is a nothing but it is a growth and company after sale the security bonds and primary market. But selling a process and new issues as primary market is nothing but a first time that we have called as IPO, initial public offering. When go to the initial public offering, then go to purchase the money, purchase the securities, that is called as the primary market. Next, go to the secondary market. The secondary market deals with existent claim there is a no few flow of funds for instrument in this market. No fresh, okay, it is very important. No fresh capital is sorry, no fresh cap, no fresh capital is made available to producers on account of transaction in the secondary market, as the deal only in existing market is a very important, make underline. In the secondary markets, the deal only in existing sector. There is a no issue the freshest capital, only existing capital. Okay, secondary market renders a very important service to the primary market by providing a ready market trading in security. Then a secondary market is a, therefore, that which allows dealing between buyers and seller of existing share, which ultimately serves the announce and liquidity of corporate stock. Okay, this is unit number 3. Next, go to the capital market. It's a very important capital market. Okay, a meaning a capital market may be defined a market for borrowing and lending long-term capital funds. Only long-term capital funds, not a short-term. Okay, don't confuse. Okay, capital market is a market for financing asset they have long and indefinite maturity. Capital market offers to ideal source of external finance. The feature of capital market is capital market helps mobilization of savings, acceleration of capital formation, promotion of industrial growth, prepare channelization of funds. Capital market deals in only long-term transaction security. The duration of such transaction is from 15 to 20 years. The investment uses the capital market companies, shares, debenture, bonds, government, securities, preference. It's a very important, preferences, mutual fund, unit, trust of India, insurance premium, risk capital, lease, finance, and credit. Then rising long-term capital, the loans are related to the housing loans, consumer loans, mortgage loans, and educational loans. Okay. Next, structure of capital market. The first one is corporate security market, government security market. Okay, the functions, the allocation and the functions of capital market is allocation of functions, liquidity functions. Okay, it's a very important, allocation functions, liquidity function. Liquidity function means easily transferable. Okay, capital market provide means the buyers to seller can exchange security mutually satisfactory price. Okay, this allows a better liquidity for the security are traded. Other functions, indicative function, transfer function, saving and investment functions. Okay, next go to the significance of capital market. First one is link between savers and investors. A very important, the link between savers and investors. Go to encouragement of savings. Okay, with development of capital markets, the banking and non-banking institution provide facilities which encourage people to save more. Is a very important, the people save more, earn more, and save more in the capital market by, for example, buying shares, debentures, bonds. Okay, encouragement to investment. Okay, the capital market, the facilitate lending the businessman and government, thus encourages investment. It provide facilitate through banks and non-banking financial institution various financial asset. Okay, there are share, security, bonds, induce the savers. Okay, next one, go to the problems of prospects of capital. What is the problem means is a limitation or disadvantage, lack of funds and mobility, effect of institutional activity, safety of wealth, high for value, unnecessary expense. This is called as problem. Next, go to the demerits. Encourage speculative activities, fluctuation in price of securities, unskilled and inexperienced employed, liberal attitude, hurdles of development affecting companies' credit efficiency. Okay, next, recent trend. For one, place circuit breakers. Int. Okay, mark and market margin is very important. Mark and margin, markup call. Okay, next, investors awareness of CAMT. Okay, this class. Okay, you have learned the financial market, banking system, capital market, and money market. Then we'll end up the class. Any doubts? Any doubts? Okay, we can leave the class. Thank you. Thank you.